What's up, my fellow traders? Now, by the time you're watching this video, I'll be already flying to Dubai, as I've already mentioned that. I have a flight today and there'll be no nat gas video today. But I've scheduled this strategy that has given me some insane amount of money from last so many years. And you might have heard me talking about this a lot in my YouTube videos. But today I'm going to give you this strategy with the exact rules, and I'm going to teach you the full sense of a market, of a trending market, as I'm going to teach you how we can trade a trending market with the exact rules of entry, with the exact rules of stop loss, so that when you see this type of trend, you know that you're going to jump in the trend, ride on the train, and ride along with the trend. As you might have heard about this popular saying that trend is a friend until it bends. And where does it bend? That is something I'm also going to teach you. In this video, I'll try to make it as short as possible so that you can get as much as knowledge in a small amount of time. So let me give you a quick concept of what a trending market is and when you can identify that trend has over. So the trending market is a series of higher highs and higher lows, higher highs and higher lows. Then we have another high breaking above the previous high, means the price is still intact with an uptrend. Now, sometime the price come down, retest the previous high and then push back up, retest the previous high. Sometime it does and sometime it won't. If it does, I will teach you how to enter. If it won't, I will also teach you how to enter that trade. So as long as you see a series of higher highs and higher lows, we are still in an uptrend. Now, when to know the trend is over? So like I mentioned, as long as price is making higher highs and higher lows, we are in an uptrend. Now, after this high, right here, this recent high, if the price starts to give us a pullback, now we're going to look at just a recent pullback, which is right here. I'm going to go through the real market in a very short while. It's going to give you some illustrations so that you know what the concept I'm talking about. So we had a recent pullback and the previous higher low. As long as we are above the higher low, we are intact with an uptrend. When the price pushes down and the pullback is strong enough and seller push the market lower, and once we get a break and close here, we know that we are in a trouble. Either the price is going to push up, retest this previous level, and then start to push down and continue to push down, and then it change its trend. And when that trend is changed, how does it look like? So after the series of higher highs and higher lows, right here the price just break below the previous low, something like this. So this was the higher low. So all we need to see, to stay intact with an uptrend, it must stay above the higher low. But once it pushes down, what does it mean? It means that the trend is over and then the downtrend starts. What do we have? Now we have a low right here. So after the higher low is broken, means we had a low. Now for the price to continue to push lower, what do we need to see? We need to see a break below this low. Once we are broken below this low right here, we have what? We have lower low, right? Now the trend is changed. Price just made a low and a lower low. Now our goal is to use the previous low for the possible entries or for the possible pullback. Once we have a lower low, price forms a lower high right here, and this is the pullback we need to capture for the entries. And when the price forms an entry condition, it makes another low, means we are intact with a downtrend. Till when? Now we have a lower high and the lower low and the lower high. Now if you remember in the bullish example, for the price to stay intact with an uptrend, it must not break below the higher low. Once it broke below the higher low, we are considered to be in a downtrend. So exactly the same but opposite. Here, very important, don't get confused, rewatch it, write it down. That is how you're going to learn the exact rules. So for the price to keep on pushing down, it must stay below the lower low. But what happens if the price breaks above the lower high? if that happens, we have a signal that price is gonna change its trend. Now once the price break above the lower high, now this lower high will likely to turn a level of support, and once broken, the previous level of resistance will then turn support, and price will now start to push up and start its new uptrend. So that is how the uptrend and downtrends look like. Now let's go on the real charts and let me show you the real examples and the real trades I personally took, sent to my members the way I teach you, and it will now make a total sense to you. Let me show you the very popular pair, the Euro USD. Now you have learned what is higher highs and higher lows. I'm going to show you the real example of that. Now here, let's start with a downtrend. Now right here, that looks like a downtrend, right? So let's do a real example of that. Now in order to stay intact with the trend, we are just using 50 EMA. So we're gonna close 20 EMA at that time. Only 50 EMA is an indicator we are using for this strategy. So the price pushes down dramatically right here, and then we had a pullback, right? So we had a low, right? We had a low, then we have a lower high. Now for the price to stay intact with a downtrend, if you remember, what do we need to see? We must see the price break below this previous low right here. Now when the price break below the previous low, how do we enter? We use the previous level as a level of resistance, right? And then at the pullback we take our entries, right? So that is how we enter. Now as the price break below the previous low, yes, we can possibly enter the trade. And in this scenario, how do we enter the trade? We're going to enter the trade either with a bearish engulfer that must happens below 50 EMA, or a valid 3.82 Fibonacci candle. The way you can calculate that, with the Fibonacci retracement from the high to the low of this candle, and if the body is below the 382 retracement, in that case we have a valid 382 candle. Now this is a valid 382 retracement and a candle, that is why we have a valid entry. Now we had this signal and we have this signal, that would be entry as well, and that would be an entry as well. Now here, how do I enter my trade? Right here, I'm going to use this as my better entry condition, which is right at the close of this candle. Now at the close, I'm going to use this wick and then add an ATR to this wick so that we can have a good room for the price to move up and down. And the ATR above this wick is 21. I'm going to add 23 with 21. It is around 43 pips. 43 pips above and 43 pips below right here. Now at this point, we had an entry condition and the stop loss and take profit has been set according to the ATR. Now if you hover over this candle, it will give you the number right here, and that number is your ATR, which you need to add with a candle. I sometimes add an ATR with the number and sometimes add 2 ATR. So initially we're going to add 1 ATR with the entry candle, and that is how we have an entry confirmation right here. So what we're going to look at, either a bearish engulfer or a 382 candle, bearish or bullish below 50 EMA. Now we had a downtrend, right? Here we had an entry, we successfully entered the trade and we are out of this trade. For the price to continue to push down in a trend, we need to see what? Now we had a lower low and a lower high, right? Now for the price to continue to push down, it must break below the lower low, and then what's gonna happen? We're gonna use this previous low for the possible entry condition, exactly like this, previous low, entry condition. But what happens here? Remember the first part of the video where I've shown you when the trend is changed. So we had a lower low and we had a lower high. So when the price breaks above the lower high, in that case it signals us that I'm no longer gonna push lower and I'm gonna likely to push higher, right? And what do you see here? The price just break above the previous high and is going to likely use this level for the possible anchor and keep on pushing the price higher, and that could be a possible reversal from here. A simple up and down trend concept. Now, it is something I use heavily for my trading, and it is not something I'm just doing for the sake of this video. It is something I personally entered as well. I'm going to show you a trade right here that I personally sent to my members, your USD at that time. And let me show you the time and date of this trade so that you don't say that, oh my, you have just made up this screenshot. Right, let me show you that very quickly. So right here, this was the trade. And if I right click on it, and if I go to the info, this was the trade I was talking about. And this was the trade that was created on 2nd of July 2024, right? And right here, what day do you see? 2nd of July 2024, right? Initial targets were 1-to-1, but I've managed this trade something like this. Now, coming back to the video, as the price just break above the previous lower high, we are now looking at the uptrend, the change in trend. If you remember the first part, we had a pullback. Now the trend has started. Here, what do you see? After the price breaks above the previous lower high, we are also broken above 50 EMA, and that is a very strong and set in stone rule. Once we are above 50 EMA, broken above the previous lower high, we are now going to start to look for the buying opportunities. Price breaks above the 50 EMA as well. Now, for the price to stay above and continue to push higher, it must stay above this lower low. If the price breaks below, we'll have another low, and then the price will push down. But if the price fails to break below this low, and after the pullback, if the price forms a signal, what signal I'll be looking at? A bullish engulfing pattern or a 382 candle, something like this. If we have either of this condition at the pullback and must be above 50 EMA, in that case, we are intact in an uptrend, and that is how I enter this trade. The way I enter this trade, just simply you need to enter at the close of this bullish candle. Stop loss can be below the wick, as I mentioned, at the ATR, which is, as you hover over this candle, is 21, and ATR from here is 21, is 42 pips, something like this. And right here, the 1-to-1 target initially has been hit, and now it pushes up. Now, if you remember, for the price to continue to push higher and for the next entry, it must break above this high, right? And must not break below this low. So we have a high and then we have a higher low, right? Now I want to see the higher high must break above this previous high. Now either the price going to come back and retest the previous high and price forms a bullish condition, that will be my entry, or it just give a pullback. Now the pullback is not just a one single candle. If you call this a pullback, that is invalid. It must be a couple of candles. If we have that, and in these candles, if you see after the pullback, if you see some sort of condition, in that case we can take our entries. But now what do we have? After that, the price makes another high, right? And then we had a pullback. Now in this pullback, we have this 382 candle, right? Again, to calculate the 382 candle, how do we do that? Just grab Fibonacci tool from low to high, and the body must be above the 382 retracement. So if you remember the stops and target rules right here, and 1 ATR, we can go below the wick, and that is 10 plus 18, which is 28 pips below and 28 pips above, something like this. And that is how the target has been hit. Now that is how we enter the trade with the pullbacks. Now if you don't know trading, you might be just blindly entering somewhere here, or you might be entering somewhere here because you see this red candle and you might be saying that's, yes, that is a dip, let's buy here, and then you see this move. That is why you need to see at least more than one candle pullback. After that, what do we have? Now for the price to stay intact with an uptrend, it must not break below the lower high. So we have the higher high and then we have the lower high. So if the price pushes up, forms a pullback, that is cool. If breaks below, then we are gonna push down. So what do we have? We had a pullback. Now, is that a pullback? I hope you said no, because that is not a pullback. Now, that is also not counted as a new high. For me, the high would be right here. And as you can see, we can see a decent pullback right here. Now this is something I call a 25% candle, not a 382 candle, which is also a bullish signal. If you calculate that with the Fibonacci tool, the body must be at 25% of the Fibonacci. So here it is a 25% candle, and that is also one of the bullish candle. Right here after the pullback, we have this 25% or a bullish candle. So all we are looking at simply the bullish signs after the pullback. Either it's a Fibonacci candle 382, either it's a bullish engulfer, which is the strongest entry, or a pin bar, which is right here. I'm sure you have heard me talking about pin bars a lot. So the entry would be at the close, and how the stop loss would be right from here. We're going to add the ATR 17, we're going to add 38 pips, something like this, and 38 pips like this for the stops and target. Simple. For the price to continue to push higher, it must break above the previous high. We are broken above the previous high right here, and to stay intact, it must not break below the higher low, right? If it breaks, then what? We are in a downtrend. So after this pullback, what do we have? We had a nice bullish engulfing pattern, right? Yes, we have an entry condition. Perfect. We're going to enter the trade exactly 180 below, around 30 pips, something like this. And what do you see? Boom. Stop loss has been hit. A reality check that the trading is not all about winning. We had some good winning streak, but here, what do you see? After the stop loss is hit, it breaks below the previous low. Means what? We are now gonna see a downside, and price is gonna likely retest this level, possibly push lower with entry condition. And what do you see here? You see a price that has broken below the 50 EMA. With that, the price also break below the higher low. Now we are looking at the sell trades only. We are not in buy anymore. Cut your losses. Now, all I'm looking at the sell trade after the price made a low, break below 50 EMA, and we had a pullback. And now what do you see here? A bearish engulfing candle. Now this is my entry. I'm only interested in taking sell trade as long as price is making the new lower lows, and we keep on taking lows as long as price is not breaking above the previous highs. So that is the concept of an uptrend and a downtrend. That is how I've been trading with the simple rules. Take your profits, cut your losses. That is how you need to be trading. I hope that video gives you some good knowledge about how to trade the trending market without any guesses, without knowing where shall I put a stop loss, where shall I put a take profit. Manage your trades if you want to manage it. Move your stop loss to break even. Create your own strategy, but at least you know the concept of uptrend and a downtrend, and you know when the trend is broken and when the trend is over, and now you're going to look at the other side. If you like this video, give this video a thumbs up. And if you're someone who really want to learn trading in full depth with the full knowledge and the other strategy which I've personally been trading for last couple of years and have been profitable using that, then just simply go to moneymarkers.uk. This is just you want to get a premium plan, and these two plans will be totally free for you. And here you will learn all the strategy which I've been using successfully. But if not, it's totally up to you. It's totally cool. Hit a like button, subscribe so that you can see these type of educational video occasionally. But if you want to know the full information about the course, I have a video linked here. Here you can watch and see what to expect from the full mentorship program, which is a lifetime access for you. And that is all you need in your trading to become profitable trader. And if you want to see some feedback from the students, right here, as you can see, all the feedback you can see if you wish to. Hope you trade green, and I'll see you guys in the next video. Have an awesome day ahead. Take care.